So you're a working class investor like myself. Every time you go on social media or you switch on the news, all you hear and see is this. Inflation concerns. Be worried. Massive crash is coming. It's going to be an affect your investments. It's going to be the worst ever. Inflation like no other. I don't know about you, but I'm struggling to keep up and understand what's going on. So for someone like myself, who's not university degreed, qualified, or has a degree in anything business, what's this inflation thing all about? Put in simple terms, it's the cost of goods that we buy goes up and becomes more expensive, and the value of our money goes down. This example shows how a price of coffee has changed over 50 years. Back in 1970, a coffee would cost you 25 cents. In 2020, it would now cost you $1.75. That's how inflation has changed. So I should try and keep it as simple as possible. It's definitely to how I would understand it as basically as I can. It would be one fist would be inflation and the other fist would be deflation, and the two powers are pushing against each other, fighting it out to who would be the strongest in the current situation. Now it's up to your government to keep control of the situation of the fight between inflation and deflation. So deflation is caused by mass unemployment, high interest rates, so it's harder for people to get hold of money than to borrow money. This in turn, with people out of work and with no money, then people don't have money to spend and put back into the economy, and that's when prices drop because the demand drops, and that's what causes deflation. Why inflation goes up is of many factors, but again, in basic terms, it is a really low interest rate, so it's really easy for people to borrow money. Lots of money is printed, especially like at the moment we've got the Fed printing loads and loads of money and pushing it into the system. They call that quantitative easing. Lots and lots of money going out into different organizations. There's good employment rate. Lots of people have lots and lots of money to spend, and that pushes the goods up because then people put the prices up because they know that people have got more money. I don't think you need me to tell you what caused the world to shut down and for us to stop spending money as consumers, and why then the flow of money started to ease, causing inflation to go down. It was up to the governments to step in and stop mass deflation and even depression. In the UK, the government decided that it would be best to give people furlough, which was to save people's jobs by making them stay at home but paying them their wage to stay at home and be safe. The US government chose to use stimulus checks, where people got sent money in checks to pay for their food, rent, bills, etc. So why is this a problem now? Economists are fearful that inflation is rising too quickly as the world begins to open up. There are already early signs with both the UK and the US having higher inflation rates for the last few years, shown in the data. So what's all this scaremongering of hyperinflation? An example of hyperinflation was back in 1918 in Germany, where a loaf of bread cost 0.5 marks. By the end of 1923, the price had increased so much that it cost 201 billion. That's how hyperinflation works, and that is not likely to happen, I don't think, in this situation, because I don't believe the governments would allow that to happen. So what can we do if inflation goes up? So putting it into the bank would be a bad idea. If we look at the UK as an example, probably one of the best interests you can get in an ISA at the moment, in just a cash ISA, is about 1%. But if inflation's above 2%, then in real terms it means that every year we're losing 1% of the money that we put in of its value, because we need to have at least 2% interest wherever we invest our money to keep up with inflation. So putting it into index funds, some type of funds, stocks or ETFs would be better. But if you look at the US, where inflation is 5%, then you need to be getting a return of at least 5% to, again, keeping your money to where the level is when you invested. So yes, stocks and ETFs and shares would be better, but you need to be getting an annual return of at least 5% just to keep yourself on the same level. So what else could you do? Obviously, with inflation going up, it's no good holding cash because the value is shrinking year on year every time you hold it. So cash is no good in this situation. Stocks would be better, at least you would get far better return and you would keep more of your value of your money. Possibly you could outrun the inflation by getting 8-10% returns, plus then you add in possibly dividends from a company. But look at really good companies, strong companies that are going to weather higher inflation. Other areas we could look into are, it's going to be in this situation, it's going to be things that you can own. Products are going to be more valuable than cash. So you could look at property. Again, it's going to be things possibly like commodities like gold, silver, copper, these types of things where they're going to be worth more with inflation, and that might be a bit of an insurance, a safeguard against the upcoming inflation. I'm going to start looking into possibly ways of looking into not physically buying gold, but looking into ETFs or index funds that track gold and silver, copper, those types of situations. You could also look into, as the prices of goods will get pushed up, you could look into maybe consumers of food. So you could look at sugar, you could look at wheat, these type of things. There are lots of different ETFs that look into all these different commodities. A lot of commodities at the moment, when you look at the markets, are really, really undervalued compared to the normal stock market. I mean, you look at the normal stock market, there still are some good stocks out there, but a lot of the stock market is quite overpriced. Quite recently, the cryptocurrency market has been really overpriced, and it's no good holding cash. So if you look at all the different situations where you could put your money, then yeah, you look at commodities, because obviously prices are going to go up with demand. So it could be a good long-term bet, I don't know. So a bit of a summary: remember, during inflationary times, especially high inflation, the things that generally the core things that people need, and that's included me and everyone else, are things like food, your home, clothing, and a fuel. So as far as clothing, I'm not at the age now where I need lots of clothing, so I'm quite happy to survive in my old clothes. So the prices of clothes won't affect me too much as the prices go up. My home, yes, at the minute I've got a fixed mortgage for a couple of years, so that will stay the same. So I might have to weather that out. But with inflation, interest rates go down anyway. So I'm at a pretty good deal now, but I might even be able to get an even better deal to borrow more money, which again, a lot of people argue in high inflation where the interest rates go right down, it's a good time to borrow money, not as in credit card money, but as in money from the banks to invest into property, etc. A lot of people argue that it's a really great time when inflation hits is to borrow money really, really cheaply and buy property, and then obviously you're paying it back cheaply and the property grows in value over time with the high inflation. The other things that's going to affect that you can't really do much about is food. Everyone needs to eat, and obviously fuel prices. So that would be things like petrol, gas, electric. These types of prices could go up, and obviously with gas and electric you might get a fixed contract over for 12 months, 2 years, etc. So that will keep that price fairly steady. But with your car fuel, etc., petrol, diesel, that may go up, and it's hard to combat that unless you stop using your car, which obviously would be great for green, and walk more or cycle. But these are the type of things with inflation that you just need to think about, and possible ideas into what you could put your money into. I mean, if obviously fuel prices go up, then you might want to start looking into fuel stocks, etc. and seeing what the price of oil is and whether that's at a low at the moment. I haven't checked it myself, but that could be an avenue to look into. Okay, thank you very much for watching. I've tried to make this as simple as I can. I know I'm going to get lots of really good degree people and finance people probably criticizing some of the things I've said and not using the right terms, etc. But I've just tried to put it into really simple terms for people like myself to understand and to get the gist of what's happening and what all this hype about in the news is. It's not something to worry about too much. It's not going to affect, if you're already invested in the stock market, over the years history has proven, over the long period of time, it's the best place to keep your money. If you're keeping the money in your bank, it is going to really hurt you big time because it's going to eat away at the value of your cash. But if you've got your money in the stock market, then over time, big period of time, it's always worked out okay for you and better. So I wouldn't worry too much, but you can also do things like putting your money elsewhere to give a little balance and a bit of protection from inflation. Like I say, I'm looking into gold, silver, etc. Maybe putting some into an ETF. So if the gold prices are quite down at the moment and silver, then if inflation and they could go up, then that could combat some losses that I've lost in stocks, etc. Okay, and I shall see you soon. Hope you enjoyed the video, and remember to give me a like and subscribe. Okay, take care.